So I want to start with the AI trade at large. What do you make of the way that these mega cap companies are trading right now in the broader market movements at large?
I think there's clearly this narrative out there that AI is a bubble, that you shouldn't spend so much money on data center CapEx, that we're not going to get utility out of these things. I think it's flat wrong. There's like top down ways and bottoms up ways to understand it. But at a very high level, we're going to go from a billion AI chatbot users this year to roughly 4 to 5 billion by the late 2020s and before 2030. And we think that AI productivity tools like ChatGPT deliver knowledge workers a 20% productivity boost today. We think that's going to triple over the course of this year and then triple again. And so you can, over 2 years, their pricing power should increase by around 9x, and the number of users over a little longer should increase by 5x. So you can compound the two to say the pricing power in the entire space is roughly 40 to 50x higher. So if you look at OpenAI's revenue or Anthropic's revenue, I think actually the revenue projections that people are talking about are conservative relative to the pricing power that they have, because these magical artifacts are going to deliver amazing productivity advances, more than enough to underwrite the data center spend that they're talking about engaging in.
So let me ask you this. You talked about pricing power. McKinsey put out a report recently that said that 39% of employees at corporations around the world say that AI has had any impact on operating profit. And at most, they attribute 5% of their operating profit to the use of AI. And I ask you that because profitability has certainly been the question. Is pricing power the way you see these companies ending up generating a profit, or how do you see that playing out?
Yeah, well, one, as far as we know on a gross profit basis, some of these companies are actually printing very healthy margins. The way to understand it is you and I are knowledge workers. I'm sure you use ChatGPT. I use it to do complex tasks as kind of like a thought partner and something to do kind of code generation, data querying, to really build out forecasting models on behalf of ARK. And everybody in ARK uses it. And so am I able to point to, oh, this query led to this profitability? No, but I'm able to say, hey, I got a lot more done than I otherwise would be able to get done in a world
Mhm.
pre-AI. And the way businesses pay for productivity enhancing software, they don't pay full freight for it. They pay roughly 10%. Well, we think almost $10 trillion is going to be spent on AI software by 2030. So you can do the math on kind of the productivity that we assume is going to be delivered to knowledge workers to justify that forecast. But it's more than enough to support the data center build out that we see today.
I want to ask you about the number of strategies that ARK has. I mean, you're everywhere. You're in software, robotics, digital assets, healthcare. Which of these categories are you personally spending the most time on right now as you study these spaces?
Well, certainly in our venture fund, we have a lot of exposure to AI. We have in our top holdings, we have OpenAI, xAI, and Anthropic. So we think that the foundation model platforms are going to be remarkably valuable, on the order of 15 to 20 trillion dollars by the end of the decade, collectively. In ARKW, which is really our AI focused fund, there's obviously a lot of platform as a service exposure,
Hmm.
including Palantir and others, but also infrastructure as a service. And then Tesla is really the largest AI project in the world. And I think you can look at what's about to happen with robotaxi, and you can say, hey, 4 to 5 years after, we'll see the same capability advance in humanoid robots, and understand why Elon's maniacal vision is likely to change the world.
I want to come back to Tesla in a minute, but outside of AI, and I ask this question because ARK has such a multifaceted strategy. Outside of AI, where do you find yourself spending the most time right now?
Yeah, we believe that 5 fundamental innovation platforms are basically changing the economic world. So inclusive of AI, which is accelerating everything, we also focus on multiomics, which is really how cures and biological data are going to change the way that we treat health, robotics, energy storage, as well as public blockchain. So, we have our Bitcoin ETF, as well as a lot of digital assets exposures and digital wallets exposures. But it's all being accelerated by artificial intelligence.
Hmm.
One of
Hmm.
the really striking factors about this cycle is everything is moving forward faster than even we anticipated, because AI is moving so quickly.
Now, if we zoom in on robotics, we've had people come on the show, a lot of people studying this space, talking about the bonkers valuations in robotics. And robotics is obviously tied to Tesla, which is a company that I know you follow and back very closely. What do you think people get wrong when they think about the robotics trend and how that is going to play out?
I mean, honestly, I worry that people are underestimating how difficult and complex a problem humanoid robots are going to turn out to be. We think that if you commercialize robotaxi at scale, which we believe Tesla is going to do this year, you generate hundreds of billions of dollars in cash flow over time. And you'll have to spend a lot of that on AI compute and manufacturing to get humanoid robots to the same generalizable degree of scale. We think it's, you know, call it a wide error bar on these estimates, but we think it's net a 200,000 times harder problem than commercializing robotaxi, meaning you have to throw that much additional AI compute power at it. Now you're making great architectural improvements and kind of the quality of the chips is improving, but it really is a multi-hundred billion dollar probably investment cycle to get humanoid robots to the state that people are hoping for and promising.
We've reported on some of the challenges that Tesla is facing getting those humanoid robots to develop at the pace that they would have hoped. What do you make of those challenges?
Yeah, I mean, the articulation of the joints, the actuators, the software stack, designing for manufacturing scale, these are all huge, thorny engineering challenges. And we think ultimately investing in humanoid robots will be an amazing return on invested capital measured over the course of the decade. We think commercialization is probably in a meaningful scale a 2029 to 2030 event at this point. And for us, the underwrite on Tesla is mostly robotaxi. I mean, don't the fact that you can buy the best-selling car in the world and pay a few thousand extra dollars, and it comes with the option to have a robotic chauffeur that you can use at any time is really astounding and amazing. And that transforms the business model of Tesla from selling cars to collecting revenue platform fees off miles driven.
If we pivot to talking a little bit about the chip sector and about NVIDIA, who do you think has the best chance of challenging a company like NVIDIA?
I mean, I don't think it's going to be a single company that challenges their primacy. Instead, there are going to be a lot of vertically integrated players kind of nibbling at the edges of their market share. And AMD has a reasonably comprehensive offering that is clearly gaining traction because of the larger amount of attached memory. The way we underwrite and consider NVIDIA is there's going to be $3 to $4 trillion in AI data center spend by 2030. And we do think NVIDIA's share is going to fall over time. But the number is so large that it's still an interesting position, even at these prices. But the chip space is definitely a cyclical space. Inevitably, we'll get to a point where people have overbought chips, and there will be a correction. It could be just on the basis of power availability.
Mhm.
And
Who gets hurt? Who gets hurt in that correction?
Well, I mean, the chip providers, NVIDIA would get hurt, AMD would get hurt. If you can't install the chips that you buy, then suddenly there's going to be an inventory cycle. Look at the history of semis. Inventory cycles happen, and suddenly gross margins fall. As opposed to going up and to the right perpetually, and then there's what people will say is the end of the cycle, but it's really probably an interesting buying opportunity into some of those exposures, given our expectations for CapEx spend over the medium and long term. But I would caution people, it's not semis is not up and to the right. That's not the way it works, and it's going to be the same this cycle. There are going to be hiccups along the way, and so combination of that cyclical nature of the chip business, and then plus the likes of Tesla clearly pushing into vertically integrated chips, and others, Trainium with Amazon, and Google commercializing TPUs. These are all competitive vectors that it's not like they immediately pull the rug out from under NVIDIA. Instead, they just put pressure on their growth at some point.
Let me ask you a quick question before we go. We had Tony Kim from BlackRock on the show recently, and he floated this idea that the big tech companies that are spending heavily on CapEx, one way for them to afford that CapEx in the long run could be loading up on debt, which is something that they've largely been able to avoid. Do you think that's a good idea? What do you think of that?
I mean, I do think these are capital assets that you could layer debt against. Historically, big CapEx cycles in innovation have been debt funded, and the debt markets are simply much larger than the equity markets. The danger is you have long depreciation schedules and the cyclical nature of these CapEx investments, and so certainly people could get off sides. I think ROIC on data centers, the return that you get in investing in data centers is going to be amazing, but that doesn't mean it's going to be amazing for everyone. I think inevitably some players are going to get over their skis, and there's going to be a consolidation event. But we'll look back at the end of this business cycle and say, wow, thank goodness the capital markets funded this build out of these amazing productivity delivering compute chips, so that we have all of the magical capabilities, cars that can drive themselves, drugs that cost 75% less to bring to market and are at market 40% faster, models that literally make your life easier day in and day out. All of those will be byproducts of this data center build that we're seeing right now.
Great. And Brett, very quickly before I let you go, one contrarian trade idea that you're obsessed with right now, give it to us.
I don't know if I want to give you an individual name, but I think that Wall Street underestimates how valuable cures are. As in, people think that, hey, it's a bad business to sell a drug that somebody just takes once and they don't have to take it again because people like recurring revenue. But if you do the math on how cures are going to be priced, you get the entire lifetime value of spend of the patient up front, plus the utility you deliver to the patient. So cures are 2 times more valuable than the typical chronic treatment.
And so what is the cure that you are laser focused on right now?
Okay, well, it's a disease that you've never heard of, but hereditary angioedema. 7,000 people have it in the US. They have to spend $500,000 per year on prophylactic treatments just to prevent themselves from going to the hospital. And they sometimes go to the hospital anyway. So there is a prospective cure for hereditary angioedema. It should price, if it were fairly priced in the high millions of dollars, but maybe $3 to $4 million. And so it's a 20 to $30 billion market, and the company that's delivering it, Intelia, is down a lot based on another a data readout from an entirely different treatment. So
I was waiting to see if you would actually say the company. So the company is
Intelia Therapeutics.
Yes. Okay. All right. Well, Brett, I want to thank you for coming on the show. It's great to have you. Always a pleasure chatting with folks from ARK, and we'll have you back on the show again soon.
Thank you so much.